Welcome into a brand new episode of WSI TV. Enjoy the show.
Hi guys, welcome back for another episode of Informer Spotlight. I'm joined as always by Taylor. How are you doing today, Taylor?
I'm good. How are you, Leah?
I'm doing great. So today we're going to be talking about something that you brought to my attention, the investing trick that Wall Street really doesn't want you to know.
Yes.
So this is kind of an interesting, in-depth look at something a little bit new. Before we get into that, we want to remind you, as always, to go onto the WSITV.com website and sign up for our free daily newsletters and get access to all of that.
Yes.
So moving into our topic for the day, Taylor, do you want to start us off?
Yes, I can, of course. So what we're going to talk about today is kind of how we take investing out of the hands of the private hedge fund managers, the ones that make money off of doing trades for you. Mm-hmm. So if you go into a traditional brokerage and you give them your money and say, here, invest it for me, those brokers make the money off of the fees for the trades that they're making for you. So essentially you're putting money in the big banks' pockets by doing this and partaking in the stock market, which you shouldn't be penalized for that. You should be able to make your own decisions and make these profits without someone taking a chunk off the bottom.
Absolutely.
So what we're going to try and talk about today is how to take those investments out of their hands and put them into yours, and give you the tools that you can start making these choices for yourself, and how to find the stock picks that they're telling you are the good ones, which, little secret, sometimes they're not the right ones. So we're going to try and show you the ways that we invest and the way that we look at the market, because we're new to this too, but we kind of figured it out and hit the ground running, and we're going to try and share everything with you that we've learned. And there's quite a few tricks that are kind of hiding between the lines that lots of people don't know about. So just kind of a general outlook on the stock market. We have a quote from Philip Fisher, who said that the stock market is filled with individuals that know the price of everything and the value of nothing.
That's a great quote.
That should tell you a little bit about the kind of people you're dealing with, and that they kind of have their blinders on. They're not looking at the right things. And so we're going to try and remove those from your eyes. Whether or not they see the truth or not is really not our concern. But we're going to try and make sure that you're not blindsided by these hindrances that they've got on you right now.
Absolutely. All right, so how do you determine value? If it's not what the bigwigs are telling you on Wall Street, then how do we know what is valuable and what is not?
Yes, that's a very good question. So obviously when you're looking in financial news, you're going to hear this company's valuation is X amount of dollars. And like, for example, Microsoft and Apple have both topped the $1 trillion valuation mark, which is huge for one company, obviously. So you're sitting there thinking, oh, well, Apple's got to be a great deal then. If I buy into Apple, they've got $1 trillion under their belt. Well, right now, the Apple stock may be a good bet. Microsoft is, but there's a differentiation between those two stocks that we're going to explain later as to why you would perhaps you'd pick Microsoft over Apple, which I think you know why. But
yes, I do.
We'll talk about it in just a moment. So if the valuation is such a big deal in the media, honestly, we don't really look at it. The things that they use to determine value, they kind of change their minds back and forth, whether it's assets, the products that they're selling, the deals that they're making within the company, or mergers or acquisitions, or even just innovations that they're starting up a new product, or they're coming up with new technology. And people will say, well, this is good for the stock, this is what you need to buy into. And that's kind of the hype that they want you to go along with, and sometimes it's very misleading, and it can put you in some bad positions when it comes to your investments.
Absolutely, and I think this is where a lot of people get stuck, is there's a difference between a company that's doing valuable things and a company that is valuable to invest in.
Exactly.
There can be a really, really great company that you believe in and that is very profitable for all the people involved. They may have great records for everything, but their stock might not show it.
Exactly.
And we don't care about what they're doing when we're buying stocks, because if we care, then we're being emotional.
Check your emotions at the door.
Yes.
So
but I think that's where a lot of people get a little bit stuck on this, or a little bit confused, or thinking, well, Apple's an amazing company. They're worth $1 trillion. I should be investing. But their chart isn't where you should be investing. Maybe you should have invested 5 years ago, but maybe not now.
Maybe not now, yes.
So, as we were saying, the people that tell you they know exactly what's going on don't actually know what's going on. They may know some, they may be purposefully hiding it from you because it puts more in their pockets, or they may just really not know.
Exactly, yeah. It's a whole bunch of smoke and mirrors for sure.
Yeah.
definitely between fund managers, financial reporters, or even central bank officials. They all have different ways of valuing a stock. So like we said, then when you're picking the valuation, yes, that's a number, but certain people value different traits about a company when they're investing in it. So if all of these experts disagree about what the best metric is to follow, that means that there isn't a right answer. Especially if you're hearing 12 different answers from across these experts, like their publications and things, obviously they just don't know that they're wrong, or they're too proud to admit it. So there is a right way, in the sense of we can point you in the right direction to certain things that definitely show you when a stock has value versus the ones that you have no idea if it's actually going to return a profit or not. So
absolutely. And so for you, this means that people are giving you this information purposely to let you down, right?
Yes.
So.
I mean, it's unfortunate and it's kind of sad to think about, but it is definitely a profit machine. Just like the investment market, when you try and get in, you're trying to make money for yourself. There are already people that have been instituted in there for who knows how long, designed to make money off of you. So we're going to try and turn that system around to make sure you're no longer being taken advantage of. But again, how are you supposed to fend for yourself in this market? How are you supposed to figure out which companies you should pick and which ones you shouldn't? We're going to show you our method, because that's the one that's worked for us. We haven't needed 20 years of financial experience to get good stock picks, which it's true. So we're definitely going to show you the ways that we value a company that are totally different from the ones that you may have heard of before.
Yeah, and as Jim would always say, this is all about the numbers. It's all about looking at the cold, hard facts of whether these are good stock picks or not. That's why we've been able to pick it up so fast. Yes, we read all of the books, we read all the news headlines, we write about it to kind of tell you guys to steer away from it, but we don't pick our stocks based on all of that hype. We pick it based on the numbers, and that's what Jim has trained us to do.
Yes, and sometimes those picks are in spite of the hype.
Exactly, yes. So our little trade secret, do you want to let everybody in on it?
Yes, I think we can finally open the doors on this one. We will let you know that we don't look at a company's valuation. Lee and I were talking about it earlier. I told her I don't even know the valuation of the company that I just invested in, because it's not important to us. We're not looking at that number. It's not something that tells me anything about that stock unless I'm really interested in it, for example. So the key for us that we're investing in successful companies is based on their track record. There's a way that you can see everything that's happened to a company in literally a snapshot, and there's nothing that's going to distract you from whether is this a good pick or is this not. All of the noise around you is going to try and convince you one way or another, and there really is a concrete way of deciding, should I invest or should I not.
Yeah. So along with that, there's kind of a rap sheet that tells you everything about what a company's worth.
A dirty little secret rap sheet they don't want you to know about.
Yeah, and if you want to tell us about it, it's called a stock chart, right?
Yes.
And
so
we've seen it before.
Seen them. Yes, we put up stock charts all the time here because they're super important to the way that we invest. So everything that's ever happened to a company is written into that stock chart. Whether you know financial jargon or not, you can see that story just in the ups and downs of the stock price in the past. So that's really what we look at when we're picking stocks.
Yeah, and this is all public information, right?
Exactly. Yeah, anyone can access this. You can see a stock chart at any time, 24/7, whenever you'd like to, about any public company. So it's definitely out there and accessible to you. They just don't want you to know about it.
Yeah, and they don't want you to know how much it means to your money. This is really the make it or break it thing to look at, because if the chart doesn't look good, then the profit's not going to be good.
Exactly.
And like you said, this is public information. There are a bunch of different websites, and just Google search stock charts, and you'll have a couple of different options. Some are more reliable than others because they have more up-to-date and more exact details of it. But
as with anything.
Yeah, but this, once you find a reliable website, here you go. You have every rap sheet of every company at your fingertips.
Yes.
So what to look for when you find stock charts?
Yes. So there are certain things in a stock chart that will tell you whether a company is a go or no go. There are certain things to avoid. For example, a stock that's pointed downward specifically for a long period of time. It's not a good pick just because someone on the news said it's on sale now. If some stock has been pointed downward, nose to the ground for a long time, and all of a sudden they're like, oh no, it's on sale, it's a discount, this company's got this and this and this going for it, you should buy in now. It's probably not a good pick if it's been downtrending for such a long time. We do have an example for you that may ruffle a couple feathers, but we are going to talk about Tesla, which we do agree between Lea and I at least that Tesla's a great company. They do have a lot going for them in the future. We think that we can see change from them in the future, but right now Tesla is not a good technical pick. We've got right here behind me this red arrow going down in this 11-month downtrend. And just last week they hit an earnings beat, and it was really exciting. The market's like, buy Tesla now, and it went up a couple percent, but it's been downtrending for so long that it's really not a good pick just because it's on sale. And there was one metric that changed it, and they had this uptick. Since then, it has since dropped back down again, and we saw all that hype kind of resulted in nothing.
Yeah, and that's if you want to be really technical about it. If you're a day trader, you could have made a pretty steady profit off of the most recent jump here last week. But you have to be on top of it.
But you have no idea of knowing.
Yeah, and that's
because everyone was surprised by the earnings beat. That's why the stock went up so fast.
Yeah, and if you just happened to be in Tesla at the right time, it would have been great for you. But most people weren't in the stock at the right time. So they either, what a lot of people did is they bought on this high as it was increasing. So it went up to here, and they bought at this point thinking it was going to keep rising, and then down it went.
Yep, and then you lose money. So that's definitely what we're trying to avoid here.
Yeah.
Even if you've got this good feeling about your company, again, check your feelings at the door. Put them aside. At least we are hoping for good things for Tesla, but I'm not putting my money on it until it's giving me the right signals.
Absolutely.
For sure, we want to make sure that we're looking out for you and don't just follow the hype with something like that. Exactly.
Yeah. So how do you know if you're being manipulated?
It's a very good question. The simplest thing that we can say to you is don't take the advice that you don't trust. And as you can see, we obviously don't trust it. Just kind of make your own decisions. There are things that the media will say to you because there's smart money involved. You never know who's buying headlines and who's manipulating the headlines that are going out and things like that. It's just really all meant to be a rhetorical machine to scare you. That fear and greed cycle that we talk about quite a lot here definitely is engineered to make you jump into things that are not going to be good profits for you, and that's what we're trying to avoid.
Absolutely, and especially if it's coming in any way directly from the company, that's a kind of a red flag.
That's very sketchy.
If they're saying, oh, the stock is on sale, or the stock's about to jump up, well, it's going to if they get that out to enough people, because then people are going to start buying it, and it's going to boost it and give them a boost instead of you a boost. And we want to give you the boost.
Exactly.
So make your own choices. We're going to uncover kind of the investing secret that they really don't want you to know. You know what stock charts is now, but once you get into the world of stock charts, there are so many companies. And if you can't trust the media, if you can't trust the companies themselves, how are you supposed to know where to start looking? So Tayler found a really great method, and we're going to talk to you guys a little bit about that. So the best kept secret value indicator.
Yes. So like we were talking about value before, experts really don't agree where it comes from. So for us, we're saying assets and contracts and products, they're kind of irrelevant. If a company's doing good, it'll show up in certain metrics that we look for. But really, when you're looking for value and trying to indicate whether a company's got it or not, it's kind of whatever you deem to be important. Do you place certain emphasis on one thing over another? Now, that doesn't mean something like, oh, I like the color of the logo, or you like their headquarters, wherever the company's headquartered. It's not things like that, but it is something that most people don't look at. And it's definitely under the radar, and you wouldn't think it would make a difference, but value comes from anywhere.
Yeah. Yeah, but we have a very specific value indicator that we're going to share with you today, and that is who's in charge of the company, right?
Which it is a very important thing. Lots of people kind of just get lost in, oh, that's the CEO of this company, but it really comes down to who is leading the helm of the ship. Are they taking it up? Are they taking it down? And we're not just talking about like someone's a conservative versus a liberal, or they're big tech versus old oil money. We're not really talking about the person's personality or their political leanings or anything like that, but it is something that you probably wouldn't expect.
Yeah, and that is?
The difference is that female-led companies return more on average than male-led counterparts. And I think the big number for us is that, as in 3 times the amount.
Yeah.
So you triple your profits in the companies we're going to show you. At the very least, you triple your profits just because you had a female-led company as opposed to a male-led company, which it doesn't work for every company, but these ones we're going to show you, it definitely made a huge difference. And it's a value indicator you probably had no idea about.
Yeah, so when you do log on to your stock charts site and you start looking for stocks, you might want to funnel it into looking for female-led companies. You might want to do some research on which companies are led by women. And this may sound like a strange indicator, but the statistics speak for themselves. And there are so few females in like past that glass ceiling that the women that do get there often worked very, very hard and very long to be there, so they have very, very diverse experiences. Which I think might account for some of this.
For sure. There's no telling why, but even if you don't believe all of our conjecture about why these women have returned the way they have, we do have three examples where over the past year, from the first week of October last year to the first week of October this year, We have Estee Lauder, Store Capital Corp, and Sunrun Incorporated all beat their male-led top competitors in one way or another. So we're going to show you those charts in just a second. But I was going to say, predispositions aside, this is obviously something that's making a difference here.
Absolutely. Yeah, so, and if you don't believe us, here are the charts. Here are those cold, hard facts. So this is the Estee Lauder chart, and it beat its male founder by 5 times the profits.
Yes.
So that's a huge difference. So that's hundreds of thousands of dollars if you knew when to invest.
Exactly.
And you could invest at any point in this chart because it's so strong. If you want to tell us a little bit about it.
Yeah, so just looking at the Estee Lauder chart, obviously, in contrast to Tesla, you've got the strong uptick that's been for the past couple years that's been going on. In the past year, we did see a 5 times profit beat for Estee Lauder versus Inter Parfums, which is their direct competitor with a male-led, or he was a male founder, excuse me. But as you can see, we've got this strong upwards movement, and if you hadn't known the difference between these two companies, iPar actually does have a very similar chart to this. You probably might have picked one or the other and not known. And it probably would have been a good investment, but Estee Lauder made you 5 times more. So it is important to look into things like that, especially when it comes to this metric that we're looking into.
Yeah, so that's for this main competitor, the male-founded competitor. It wasn't a bad chart.
Exactly.
It just didn't make you as much. So you can still make really great profits with any company, but
with a good chart.
Yes, with a good chart. With a good chart. But this chart is the best chart.
Yes, between the two of them for sure.
Yeah. So then we have another example with Store Capital versus Liberty Property Trust.
Yes. So between the two of these, Store Capital has won an award I was telling Lea about earlier. They were recognized for having a 20% or more female board, which is kind of a low number to beat between the two of us talking about that, but it's kind of just the industry standard. In contrast to Liberty Property Trust, which only has 2 women on their board, and we did see a 1.5 times profit beat between these two companies. And again, we've got that super strong upwards movement going on over here. The real estate companies do really well right now. Liberty Property Trust is doing really well right now, but again, you would have made just that much more money on this company.
Yeah, and you can just tell this when we tell you that you want to look for a specific kind of chart. This is the ideal chart.
This is what you're looking for. Yes.
Yeah, and the fact that just 20% female board makes that much of a difference.
It does. Yeah, you wouldn't think so, but
yeah, and I think it's just that diversity, getting different minds at work, getting different kinds of people in a space to talk about this. So profits speak for themselves.
Yes.
And then we have Sunrun versus Tesla.
Yes. So Tesla comes back and makes another appearance. For this one, really all you need to know is that Tesla returned a loss last year. You would have lost 6.8% of your money if you had invested in Tesla for the past year, not even accounting for if you were still in Tesla. On the opposite side, Sunrun is a solar company. They're competing with Tesla's solar components. They profited in the past year. And as you can see, they do have a very strong upwards movement in this chart as well. Contrasted to Tesla's 11-month downtrend that we saw in the past. So it definitely makes a huge difference. We have a female CEO running this solar company. They're into green energy. They're on the forefront of what's happening as we're coming into a new year. And there obviously is making a difference.
Yeah, and you can see from a newer company too that this was a penny stock pick. And this has grown from just over a year ago. It was way down here at about $6, and now it's jumped to $16. So it's jumped in $10 per share in a little bit over a year. That's a crazy growth.
Yeah, that's a crazy gain.
Yeah, so that's great. So breaking through that glass ceiling.
Yes, so whether it's a personal experience or not, women do face challenges breaking into businesses, but once they're there, obviously they do make a difference. Wall Street doesn't want you to know that that's what's making the difference, and it may not happen for every company, but obviously it is having some sort of impact. So, I don't know, maybe take up your nearest feminist movement and break the glass ceiling, because you could get some profits there. Who knows? Yeah,
and it's just a really great place to start when you're looking for those successful charts.
Exactly.
And we're not here to tell you exactly why it works, but we are 2 young women in the finance world, and we've been pushing really hard to be able to figure all this out, so we can say that we know how to find the right stocks. So someone else might be able to find the right company and lead it up to profits. So the next time you invest, look for women. Search through the leadership. See, and also in addition to female leadership, look for steady leadership. If the CEO is flying off the wall all the time, if they're in the media all the time and not in the good way, if they're constantly on Twitter about personal stuff, like there are all these different indicators that if it's not a steady, strong base with that CEO, then there's not going to be a steadiness in the company, and that might show very clearly in the stock chart. But for today, our big indicator is look for a female CEO, look for that feminine leadership.
Those female-led companies.
Yeah.
That's where it's at.
Yeah, so I think that's about everything that we had for you guys today.
Yes, I think that's it.
Yeah, but thank you so much for bringing this to my attention, Taylor.
Of
I think it's a really interesting topic, and I had a really great time talking to you about it.
Yeah, of course.
So we'll see you guys next week, and thank you for joining us.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.